Let's get into another conversation here. Let's talk. Let's let Scott lead a conversation for once. Is jumbo lending becoming more popular now?
Oh, shizzle.
I wasn't prepared for this one.
Oh, really?
Oh.
No.
Too bad.
Rewind.
Oh, I'm gonna have to go off of memory.
No. Just do your.
First of all,
you're prepared for.
No, it's in my bag.
Let's
want me to go get it?
Yeah.
let's talk about jumbo lending in general. What is jumbo lending?
No, they're absolutely. It's absolutely available. Jumbo lending is okay. Let's see, but the best way to explain this: you hear Fannie Mae, Freddie Mac, FHA. Fannie Mae, Freddie Mac, FHA. They have a certain amount of money that they'll lend. It used to be $417,000 for the longest time. Then they increased it.
That's not going to buy much in Southern California.
Yeah, they increased it to $729 in the.
Was that the jump from $417 to $729?
Yeah, actually it was.
Oh my God!
Now conventional has eased it down to $625,500.
$625,500.
FHA is still at $729 but it varies by county. So if you're buying FHA,
a loan on your home above $625,500 is considered a jumbo loan.
Right, not purchase price, the loan.
The loan.
Right,
which
just the loan.
It's what you have left after your down payment.
If you're using conventional financing,
okay.
The conventional financing is $625,500 anywhere in the state. FHA, it varies by county, but the most you can go is $729, $750.
What's LA County?
$729, $750.
Okay, I'm assuming Orange is
Orange is $729.
Where the homes are more expensive.
San Diego's a little bit lower.
Does that change with VA also?
VA follows.
That's a good question.
VA
I think the number's lower.
Guidelines, which
way to put the brakes on the show, Frank.
It's going to be HUD, so that's FHA.
It's FHA, yeah. So jumbo financing is anything above that.
Okay. So now that we've established what jumbo financing is for the people at home.
What this really means is that Fannie Mae, this is a wholly different conversation. What Fannie Mae does is they say, if you write loans that meet these guidelines and doesn't exceed this price, if you lend somebody money to buy a house, we'll turn around and buy that loan, the paper off of you, so that you have money to go lend to somebody else. So they created liquidity in the housing market. That's essentially what they did, is created trading. Now, jumbo, usually there's not a big secondary market for investors for jumbo loans.
Not a lot of people want to buy jumbo loans.
Right. So the people that are lending jumbo loans are they can be insurance, backed by insurance companies, or they could be the big FDIC insured banks. Yeah, and that's
so they're long-term plays versus short-term plays.
Well, they've got more money and they're going to service the loans, and they've got they're bundling other products, financial products, and exactly it's higher risk, and then banks that have more net worth are going to take. They're going to take the higher risk, or they have more assets.
Now, with higher risk comes tighter guidelines, right?
Definitely. Absolutely. Definitely higher guidelines.
And not everybody gives jumbo loans, or not everybody finances jumbo loans.
For a while, they were really hard to get. Wells Fargo was pushing. It used to be Citi was kind of the jumbo, the only one that retained a jumbo product. But now Wells Fargo is getting really, really aggressive, and they got some really good programs.
Is it a higher percentage rate?
US Bank.
Not a whole lot. I mean, it's a little bit higher. It's a little bit higher.
But they make a little more money because it's a slightly higher rate, and of course it's a bigger number. Their interest that they're going to make on that loan is pretty good.
Well, you have to fit. You got to think. Here's the thing with banks: they want you to fit in a box, and the jumbo box is much smaller. It's like trying to get those little square.
The jumbo box is smaller.
Well, you get fries.
And what I'm noticing with Wells, it's a really case by case scenario. They have these guidelines, but they're more like suggestions. You can bring it to Wells and say, "Here's my scenario.
Yeah.
Can we go beyond these guidelines?"
They have some flexibility.
Wells it's going to be make sense financing.
Yeah.
But
I like that.
When Alissa says it's a box, here's the box: minimum 720 credit score.
That's pretty high, isn't it?
Okay. Yeah. And you should have a minimum 720 credit score. Hopefully, if you're buying $1 million house, that's a lot of money to be thrown around.
Yeah, but in this case, you could be buying a $725,000 house in Orange County. That could be a shack.
Yeah, I wouldn't let somebody.
I'll live in that shack.
I'd say if you're going to buy that much home, hopefully you have the $5,000 to reach conformity.
Okay.
Another thing is it's only you have to prove all your income. There's no such thing as stated income or suggested
but that's
income
gone
or whatever.
Totally,
that's
isn't
totally
it?
gone. Full documentation.
Not totally.
Only.
Ooh.
Fully amortized. So they're always they're not going to be balloon payments or negative amortization. There are ARMs available, so you can get. Actually, ARMs are really popular with jumbos. 3, 5, 7 year ARMs, so it's fixed for a period of time and then it turns adjustable after that.
Why are they more popular with jumbos?
Because, typically speaking, the somebody in that financial position is typically a little bit more savvy, and because adjustable rate mortgages are so much lower interest rate, they're a little bit better at managing their finances. They're not afraid of taking a super low interest rate loan for 3 to 5 years, reinvesting that money in something else, and then going back into the game later. So a lot of people who are not super financially savvy, they want a 30-year fix, pay the same payment for 30 years, and pay the thing off.
A lot of them
never
will
worried
have,
about it again.
And just never worry about it again.
Well, they're thinking a couple
I had a girlfriend
of
like that
chess
once.
move steps ahead.
Second.
It's usually this is the first move of a 7-move planned. And it's a big game. I love it. It's
right,
fun.
Absolutely. Well, because they can literally borrow $1 million at probably 3% interest for 5 years, and then
leverage that
and if they're and then in 5 years, no biggie, they're going to reassess. They're going to move stuff around. They're going to do what they got to do.
Yeah.
So
that's high finance, baby. That's high finance.
That's high finance.
Yes.
So they will go up to $2 million, like Wells Fargo will. So you're going to have a cap. Typically, most mainstream jumbo lenders are going to have a cap, the maximum you can borrow. Another big part of this is they'll go up to 80% loan to value, but they will allow secondary financing up to 85%. So this is Wells Fargo's guidelines. So you might find that because you're not going to get mortgage insurance probably on a jumbo loan. Actually, is that right?
There are some.
There might be some. So
is that right? Who you asking?
Definitely. Well, because I'm just thinking.
Ladies and gentlemen, if you know if that's right, call me.
No, he was looking at me.
I don't. Well, because our company doesn't do a lot of jumbo loans because it's not what we're great at. We'll refer them to somebody who's great at dealing with jumbo loans. We deal a lot mostly with first-time home buyers.
Well, that brings up another requirement. You can't be a first-time home buyer on the jumbos.
Right. You can't be a first-time home buyer.
First-time home buyers can't buy jumbos?
No. They don't want you going all in with $1 million.
If I got the money and that's my first house and I want to live there.
If you're Justin Bieber and you're 18 buying your first home.
Yeah, he paid cash though.
Or you worked at Del Taco yesterday, then you won the lotto. Chances are you're going to lose that home in a couple of years anyhow. So it's absolutely available. I mean, it's out there.
So is it becoming more popular? Which was the original question of.
It's becoming more available. Yeah, it's becoming more available. I mean, Frank can tell you that above conforming loan limit, that housing market still doesn't have a ton of activity in it. The lending's not really available, but what I am seeing is the financial institutions getting more comfortable. There is enough stabilization in the market that I think you're going to start seeing players come into the jumbo market to kind of address that, that area, because we've got a lot of, $1, $2, $3 million homes that are now worth, 9,
the 8s and 9s,
8s, 9s, 1.5, that used to be 2.5 or whatever. So there's some
2.5 to 8. Yeah, I don't know about that one, but.
No, from 3 to 2.5 or whatever. But
yeah, well, the average depreciation is what, 40%.
They're taking a hit out
from
there.
from its high point and whatever.
It depends on what area too. If you're coastal, you didn't hit that. You didn't get that. If you're Newport Beach on the hill or whatever.
Riverside.
I'm selling a townhome that was 1.4 at its peak, and we just moved it for 7.25.
1.4 at its peak, and then you moved it for half.
7.25.
What city?
Yeah. Long Beach.
Long Beach.
We had a $1.4 million townhouse in Long Beach.
We had one, and it's now 7.25.
Exactly. There was one. There was one.
It was really high on the top of a building.
Wow. All right, Scott, break it down. Breaking it down, I think you're seeing some loosening up in the jumbo money market. I think it's still a pretty tight box. You've got to have
great credit. This can't be your first rodeo.
You guys are just feeding me lines, and I'm not taking them. I just want you to know that.
You have to have great credit, good cash flow. You got to be able to prove everything, and there's some great options available for you. You can get you can borrow a lot of money at a really, really low cost right now if you're in the financial position for it.
And I hope that everybody listening is in a position to get jumbo loans.